Hello, viewers. Hari Om and welcome to our 20th episode of Sanskriti and Sanskar. Today, we have a very special guest on our show. Um, I will introduce quickly to Mr. Shri Satya Charan Tiwari ji. I'll just give a quick introduction. Mr. Tiwari has done his mechanical engineering and post graduation from and diploma in computers from MS University, Baroda. Initially, he worked as a project manager in ONGC when he started his career. Then he changed his course and joined the Indian Revenue Services in 1993. His 30 years of service in Indian Revenue Services, he has extensive experience in corporate taxation, of course, seizure assessments. He specializes in the domain of international taxation and transfer pricing. In those days, it was very novel concept in the taxation landscape. He has trained many revenue officers during his tenure. Also, he has trained chartered accountants and finance specialists from big four companies. He has started a website called www.satyablogs.org. It is satyablogs.org. He shares his thoughts regularly on the website and and his thoughts on global finance and tax issues. He believes in free exchange of ideas and welcomes queries from anyone concerning finance and taxation. Currently, Mr. Tiwari is giving relentless service as an independent consultant, and his maximum time he spends in charity and education. So let's give a warm welcome to Mr. Tiwari. Please welcome to the show.
Thanks, everyone, and everybody is welcome to have a free exchange of ideas. No holds barred, no issues.
Thank you, sir. We are honored to have you on our show. Now I will introduce our panel speaker today. Our panel speaker for today is CA Anil Makhija. Mr. Anil Makhija is a chartered accountant. He has 8 years of experience in areas of internal audit, mystic audit, fraud investigation, and business consultancy. He has worked in various sectors like pharma, real estate, manufacturing, and F&B. He has worked with reputed multinationals during his career. He has proficiencies in SAP and ERP as well. He's a very tech-enabled person. He has worked for large-size companies with strength of 6,000 plus employees. So let's give a warm welcome to CA Anil Makhija.
Good evening, everyone. How are you?
Welcome, Anilji. Welcome to the show.
Welcome,
You're all
Anil.
well. Hear good
Thank
thoughts
you.
from you.
Thank you so much, Vishal. Thank you, sir.
Great. So now we take this show forward, and I would now invite Dada Dayal Harjani, Akka Dadu Zen, to this show. Please welcome Dadu Zen on this show, please.
Hari Om. Welcome all of you with the Namaskaram to all viewers.
Namaskar, Dada.
सत्य जी नमस्कार सत्य जी अब दिल से हृदय से आपको स्वागत हम करते हैं most welcome to our show.
Yeah.
And we are very anxious to listen to your words of wisdom regarding taxation. And a warm welcome to Anil, who has
Thank you,
come
Dada.
to us first time. Welcome, Anil, sincerely from our heart. Now,
Thank you,
traditionally,
Dada.
we start with Man Ki Baat or Doha from Kabir Sahib. So today I'm going to convince or convey to you something about a hot topic called meditation. Meditation is the talk of the town, and people have not understood this word very clearly, and the amount of episodes that are going on in the name of meditation, one can write a thesis on it. Personally, I believe that if one does not have love for humanity and devotion to God or godliness, then to attend to meditation or to experience meditation becomes a masquerade, nothing else. So one has to understand that one has to have certain attributes, certain preconditioned things before you enter the domain of meditation. तो उसके ऊपर एक पंक्ति आ रही है मन में, which says, घर में रहे ना आटा, घर में रहे ना आटा, चले पकाने पूरी. ध्यान, भक्ति के बिना ध्यान करे, भक्ति के बिना ध्यान करे तो समय होगा जो खोटी. So one has to have that first condition of devotion to God. The next is God's love for humanity, which is missing in this world. And for that, I have a poem, a poetic offering for all of you and my viewers. It's a bit longer than usual, but I have to say it. I hope you don't mind. Vishal, Anil,
Yes,
Sure, sir,
yes,
please go
sure.
ahead.
Please go ahead.
Okay, the title is Love, Dil Se. And it says, purify the heart with a cup of love at morn, to embrace humanity in sincere adorn. Only love can ever transform, to seek a new dawn of reform. Bonding in music, love, or game, as children rejoice in every domain. Take all your values that permeate to blend in a theme for all initiates. In trust to live and free of fear, Lord of love will soon appear.
Wow.
Free of hatred, enmity is a sure way, making this world worthy of happy stay. Mercy from God we all expect. First, learn to love all in due respect. Search your hearts before you speak, to avoid abuse, hurts in humble meek. Practice first all that you lovingly preach, bliss to enshrine your sublime speech. Enough of violence, enough of war. From the Lord of our hearts we have remained so far. Love without dharma is sentiment. Dharma bends in love for a sane regiment. Our pilgrimage starts from the heart and finally ends in the divine heart, Dil Se. So seek and relentlessly search within. God alone you will find in supreme rhythm. And that is our Man's Ki Baat for today. So now I will request Satyaji to come on the screen and we can start the show by asking our first questions. Satyaji,
Yes.
Pradeepji. Satyaji, my first question, can we start?
Yeah.
Or would you say anything?
We can start. I just wanted to thank you for emphasizing the importance of meditation and importance of love, because the meditation is important when you get a notice under Income Tax Act.
That's true. Very important to save blood pressure and tension.
Okay, please.
My first question to you, Satyaji, what can be termed as a NRI or PIO, and what are the implications? And what is the concept of OCI? It's three
Yes.
questions in one.
Yeah. So, Dadaji, what happens is that we have a quite big diaspora of Indians who are staying outside the country. And I am happy and very proud that almost most of them have done very well outside. And Indians as a community, because it is in our blood, we retain a very close bond with our native lands. So even if people have gone 3 generations back, they still come to India. They just love coming here and staying. they feel comfortable in the nature or the climate or the cultural uh, environment that we have here. So India doesn't have a dual citizenship. India, if you have Indian citizenship, you can't have any other citizenship. But the government wanted to help or reach out to all the people who are outside and make it convenient for them to travel. So that is where this concept of uh, defining non-resident Indian or person of Indian origin came into being. So a non-resident Indian is not merely a citizen of India who has gone out and is staying outside, but he is also a person who was a citizen of India earlier, but now he has renounced the citizenship for citizenship of the country in which he is living now. So even if he does not have Indian citizenship, he is termed as non-resident Indian. The second category of people are person of Indian origin. This is a more broad-based definition. If you have any connection with India, then you are termed as person of Indian origin. In this, if your parents, father, mother, or grandfather or grandmother were either a citizen of India at some point of time or they were born in India, then you also become a person of Indian origin. So these are the two categories of people who are entitled to hold a registration of overseas citizen of India. So these two people can apply to get registered. It's a registration, and you get a cards of OCI card, OCI registration. Now the benefit of OCI registration is that even if you are a foreign national, since you are a NRI or you are a PIO, you do not require a visa to travel in and out of India any number of time, and you are allowed to work in India. There are no restrictions at doing any activity in the country. So if you have registered yourself as a OCI, then the visa requirement goes for a lifetime, and you don't really need to register at a police station after 6 months have passed and all these things. Now the only restriction which is there in respect of OCI is that the people who had migrated from India and are staying in neighboring countries, that is the countries of Pakistan, Bangladesh, Nepal, Bhutan, Iran, Afghanistan, and Sri Lanka, they cannot apply for the OCI card. So that's how the definition of NRI, PIO. It's a great benefit to the people who have migrated and they want to come back and have a connection with the country.
But there is one thing about OCI card.
Yes.
If we have an OCI card, they also need our passport with the endorsement. Now, I
Yes.
don't see why that is needed. If I have an OCI, which is almost like an Indian passport, then what is the need of having a passport endorsed with the visa,
OCI.
permanent visa?
Dada, we do not need a visa. The endorsement is probably to record your travel details, because that is needed by the Home Ministry, not by any income tax or any other
So that
department.
means if my OCI stamp on my passport was given to me, say
Yes.
15, 20 years back,
Yes.
and I have renewed my passport, I might have to
Yes.
carry my old passport every time.
Either you have to carry your old passport in which the OCI stamp is there, or otherwise get it stamped on the new passport. But
That is
you have to, I mean, I'm sorry, that's the way it is.
so that's
The
easy.
passport with that OCI stamp has to be with you when you are traveling to India. Otherwise, it becomes a difficult thing proving before the immigration officer that you are a PIO or NRI.
Okay, so then what are the provisions relating to maintaining bank accounts by non-residents in India and the taxability of interest accruing on such accounts, and maybe also dividends that some of us are getting?
Yes.
So NRIs are taxed very heavily on that. I think more than 20-25% dividend. And plus we have to pay income tax. So I feel there is something, there's a flaw here, but you can guide us on this.
Dada, there are three accounts. Now, once we get a registration as OCI, which is nowadays online with submission of documents. So it's not a big deal. It's very easy to get registered as OCI. It's an online process with the documents being submitted either by VFS or in the consulate. So that covers the registration, and that registration is permanent. It is not to be renewed. Once you get a OCI registration, it is forever. So there is no renewal concept in the OCI registration. Then the bank accounts. Now the bank account management is controlled by the FEMA regulations, Foreign Exchange Management Act regulations. And there are three kind of accounts which the non-residents can maintain. The first one is like if an Indian moves out of the country and he acquires a status of non-resident by staying outside the country for 6 months, and if he has a normal account in India, then he needs to inform the bank, and the bank will earmark that existing account as a NRO account, which is a non-resident ordinary account. Okay. There are two other accounts which a non-resident can maintain. They are, one is non-resident external account and a FCNR account, foreign currency non-resident account. So the difference between these three accounts is that the NRO account is an ordinary rupee denominated account which is just designated as an account belonging to a non-resident. So the non-resident can do any transaction between this account and an Indian account. It's a rupee-based account. He can, but there is a limit to repatriation from this account. Per year, he cannot take away, although the limit is very high. It is 1 million US dollars. So the limit is very high, but there is a limit on repatriation in this NRO account. And the more important thing is that the interest accruing in the NRO account is liable to tax in India because it is a normal Indian account. Now the non-resident can also open a NRE account, which is known as non-resident external account. And this account, non-resident external account, is opened by, it is also an account which is maintained in Indian rupee. But the account can be opened by remitting foreign exchange, either in cash or in form of traveler checks or online transfer. So the bank will open the non-resident external account without any balance in it. And once the account is opened, you transfer foreign exchange into it, which will be converted into rupee. So this is also an account which is maintained in rupee only. But the benefit is that this account, the interest earned in this account is not taxable in India. So the non-resident is not taxed on the interest which he earns on this account, which can either be in the form of a saving account or in the form of a fixed deposit. And second thing is that there is no limit to repatriation from this account. The non-resident can take at any given time, take away entire balance in that account outside the country whenever he desires. This account is also susceptible to foreign exchange depreciation because it is maintained in rupee. So when you bring in the money, your amount is converted into Indian rupee at the exchange rate at that point of time. And when you take it out, then the conversion it at the time you are taking out, the exchange rate at the time you take it out. So it is open to devaluation problems. The third account is FCNR account. This account is maintained in foreign currency, in the currency in which you deposit the funds. So this account is not open to foreign exchange fluctuations. You get whatever you deposit in the same currency, and the interest earned on this account as well is not open to taxation in India. So the NRO account, repatriation limits are there, and income tax is taxable, interest is taxable in India. NRE account and FCNR account, no limit on repatriation, and the interest that you earn is not taxable in the country. It is exempt under section 10(4) and section 10(50). So these are the benefits. Another thing which I wanted to say was that the NRO account can be operated jointly with the Indian resident. So if my daughter is in US, she comes and opens an NRO account and makes me a joint account holder, it is permitted. But this thing is not permitted in NRE and FCNR accounts. There the owners have to be non-residents. So if these two accounts are to be operated from India, then the non-resident has to give a power of attorney to an Indian national to operate, otherwise operate it online. There is no problem. So these are the three accounts which normally a non-resident operates.
Very interesting.
Any query, Dada, from this?
Yeah, only the sad story is that people like us who have been investing in India for the last 10, 15 years are very sore about the exchange rate. We want to get our money back. We have lost more than 50-60%. And so investment in India becomes a loss proposition for us. So I think the government has to do something to keep the rate stable, to encourage people like us to bring in more money in our
Dada, yes, Dada, I will also talk about investment avenues, in the sense that number one, I wanted to tell you was that if you are a non-resident and if you want to invest in Indian debt or equity funds or directly into shares, then recently the government has amended the Income Tax Act, and so that if you buy, there is a special economic region called Gift City at Gandhinagar, Gujarat. Gujarat. In Gujarat, you have a Gift City in Gandhinagar, where the national NSC and BSC, both of them have opened an exchange, trading exchange, just like the BSC and NSC exchange in Bombay. And all the shares which are traded in Bombay are also traded in Gift City. And if you invest there and if you get capital gains, as a non-resident, you are exempt from paying any tax in India.
Once again, on your investment in shares or funds?
In shares or even debt instruments.
But funds, they deduct 10% and give us the money, no?
No, why?
We have been paying 10% in the multi-cap fund.
That is tedious when you are buying shares in Bombay.
I see. Okay.
Because the capital gains on shares, the capital gain on share is taxed at 10%. So when you are buying shares directly from NSC and BSC, then the capital gain that you earn is subject to 10% taxation. So
Okay.
when they pay you the money, they deduct 10%. In gift city, there is no TDS because the amount is not taxable in India. So you will not be taxed if you open an account in gift city or invest through a dealer in gift city in the shares of Indian company on gift city exchanges.
Okay. So we'll have to consult our auditor for this in the future.
Yes, yes, you can.
So my third question is, could you elaborate on the situations under which an NRI becomes liable to tax in India?
Yes. So your main grievance is this, isn't it?
Yeah. This has become a very confusing situation
Huh.
because I think many auditors also don't know about this, or we have been forewarned about this. And there's a lot of rumors that we hear. So we do not have a streamlined way of thinking how to position ourselves.
Dada, one more thing I wanted to pass on to our viewers, that I have prepared a slide.
Yeah,
So,
okay.
the slide can be shared with everyone after
Okay.
we complete our discussion.
Okay. That'll be
Okay.
good.
So now, with regard to taxation of a non-resident in India, uh, there is a uh, uh, there are two interesting terms which are used in international taxation parlance for general taxation. So, globally, the country of residence, the country where you reside, is known as the country of residence. So, globally, the country of residence has the power to tax its residents. Okay, that is the general rule. That is known as general rule. It happens that some power is also given to the country of source. Now, country of source is the country in which the income has its source. So, the country of source can also tax the income which you earn in that country. So, Dada, if you are a suppose British resident, then the Britain has the power to tax your global income. But suppose you are earning some income in India. So the Indian state also has a power to tax the income which you earn in India, and likewise, you may have some income in Singapore, some income in India, some income in say Dubai. So all those countries where this income arises, they have a power to tax these individual incomes. And then the country of residence, where you actually file your return, that country is obliged to acknowledge that taxation. Suppose you have uh, earned income in India at 15 lakhs, 20 lakhs, and paid taxes here, then the country of residence will give credit for those taxes when it is taxing your global income. So that is how the general taxation environment works globally. That is the basic concept. So the residency becomes a very key item for determination. If you are a resident of a country, your global income is taxed in that country. So you want to be very sure, and this residency is computed every year, because tax residency condition changes depending on number of days you spend in a country. So in 1 year you may be a resident of India. I may be a resident of India, say, in 1 year, because I have lived for 184 days, 83 days in India. And next year I decide to spend more time in UAE. So I stay in UAE for 7 months. So I become a non-resident for India and become resident of UAE. So residency is tested every year. Income tax residency, which is different from citizenship and different from definition of non-resident Indian that we discussed earlier with reference to PIO. Okay. I hope you get the point. The fiscal residency is different from normal residency. Right? Now, this residency is defined in the taxation laws of each country. So, suppose for UK, I was just looking at it. Since you are presently visiting UK, then I would just like to tell you that for UK, the condition of residency is if somebody is working full time in UK, number one. Number two, if someone has spent 183 days in UK, and number three, if that individual has a habitual abode only in UK and has stayed in UK for at least 91 days. So this is the definition of residency in UK. Similarly, India has its own definition of residency, and if you, we will discuss that residency definition in detail. And if you happen to fall into that residency definition, then your global income is liable to be taxed in India. Right, Dada?
I'm listening. I'll pose my question later on.
Okay. So now let's define what is there for India. How is the Indian residency has evolved? So in India, we have three terms which are very important. First is Indian resident. Second is an Indian resident who is not ordinarily a resident. We call it R, but NOR. And the third is a non-resident. So if you are a resident, your global income is taxed. If you are a non-resident, your only Indian income is taxed. And if you are a R but NOR, then also your Indian income is taxed. You are saved from offering your global income to tax in India for the period for which you are R but NOR. So these are the three categories. Now, for being a resident, there are three categories. Indian resident. If you have been in India physically for more than 182 days, number one. Can Pradeep put on this slide? This is slide number 8. Pradeep, slide number 8. Yes. So if he has been in India for 182 days or more, in India the period which is to be reckoned is the financial period, that is from April to March. So in the April to March, which is under taxation, if you have been in India for 182 days or more, or if you have been in India for 60 days in that year, but you have been in India for 365 days or more in the preceding 4 years, then also you become a resident. Now the second condition is a slightly stringent condition. It is not applicable to non-residents or PIOs with no income. But if you are a non-resident or a non-citizen, PIO, and you have income of more than 15 lakhs, Then for 60 days, then if you spend more than 120 days in India in that financial year, you become citizen of India. You become resident of India for that year, tax resident of India for that year. Your global income is liable to be taxed. Dada, I have your question in mind, and after I
Yeah,
discuss residency, we will talk as
yeah.
to how we this is not very applicable to people who are residing in countries with whom India has a double taxation avoidance agreement. Okay, okay.
Okay.
So residency is generated if you have stayed in India for more than 182 days, or if you have been in India for 60 days in that year and 365 days or more in preceding 4 years. This 60 days is increased to 182 days if a non-resident has no income in India, a non-resident Indian or PIO, if he has no income in India. But for non-resident who has income of 15 lakhs or more in India, this 60 days is only increased to 120 days. Clear, Dada?
Yeah, yeah, it's
Okay.
clear now. But since how long has this law been there?
This is a very recent law. This 120 days is from, I think, last year.
So before that, if we have overstayed, then it does not apply to
It does
us.
not apply. Doesn't matter.
Only from 22 onwards or 23 onwards.
23 onwards.
So is there any reference, a mandate where we can read about
Dada,
it?
there is a saving clause for you, which I will come up later.
Okay,
Till that time, you can drink more coffee.
okay, no problem.
Okay.
Okay,
So the third clause that I said was R but NOR, the third item. For that, suppose an Indian wants to come home, or in 1 year, the non-resident was became, I mean, his mother became very ill, and he was forced to be in India for a very long time. Suppose he stays in India for say 200 days or 250 days. So does he offer his American income in India? So he will not be required to do, because he falls in the third category. The third category is that if a non-resident has stayed in India for a period more than 182 days, so he is a resident for that year otherwise, but he has not been a resident of India in 9 of the 10 preceding financial years.
correct.
Okay? You get it, Dada?
Yeah,
So
getting,
if
yeah,
he has consistently been a non-resident, and then in
correct.
1 year he is forced to be a resident because of some issue, then he is a resident plus, but not ordinarily resident, and therefore in that year he will not be required to file his global income into India. There are two definitions. Either he is non-resident in 9 out of 10 preceding financial years, or he has been physically in India for less than 730 days in 7 immediately preceding years.
Can I repeat this?
Yeah.
So to become a resident, if you have stayed more than 182 days in any year of the 9 or 10 years,
No,
1 year if
no.
you become resident.
Uh, suppose your taxation for last year is being considered 22-23. Okay.
Yeah,
22-23. So in 22-23, if you are found to be a resident because you have stayed more than 182 days, then we will go back before 22-23, that is 21-22 and 8 more years, 9 more years. That is 10 years preceding 22-23, and check if out of those 10 years, you have been a non-resident at least in 9 years.
Correct. So then we cannot be taxed.
So then you cannot be taxed on your global income.
Okay.
You will be taxed on
Got it.
the current year income. Got it?
But now, can I ask you a question? Can we have a chat with the people who are making these laws, or is there an ombudsman in which we can share our views and objection? Because 120 days is a sham. Today, look, some people are staying in England, right? They stay for 3-4 months there. Then they come to Dubai, they stay 3-4 months there. Then they come to India to get rid of the cold. They come in winter time to India. So, what is their position? They are
Okay.
resident of no country.
Now, now suppose there may be a situation, or there generally is a situation wherein, because of these individual local tax laws, you become a tax resident of both countries, right?
Correct.
So you are as a US, as a UK citizen, or as a person who has a normal abode in UK, you become a tax resident of UK, and because of the Indian law of 120 days, you also become a tax resident of India, isn't it?
Yeah.
Correct.
So now what happens? India has a tax agreement with UK. That is known as double taxation avoidance agreement, right? And in the double taxation avoidance agreement, there is an article, which is Article 4, which defines residency of both the countries and also provides a tiebreaker. It provides a tiebreaker in the sense that if you are a resident of both the countries, then how it should be decided as to which country should tax you as a resident. So what I will do is, I will read out the tiebreaker which the UK treaty, UK India taxation treaty has provided. And then you will realize that, Dada, you can relax and you need not be taxed in India. So, wait.
Okay, good.
Okay.
So now I'll let Anil take on the questions. Satyaji,
Huh.
I'll ask our Anil Sahab to ask you a few questions.
Check. Okay.
Anil, please
Okay.
go ahead.
Huh.
So, sir, as you said, you will bring out one DTAA clause.
Yeah.
You can let us go through that clause and let us understand with the example. That will help. Of us.
Yeah, Anil, I will read out one by one. What happens is that there are not just one, they are known as tie-breaking clauses.
Correct.
They are known as tie-breaking clauses, and there are 3 or 4 of them. So, for India-UK treaty, Dada has been found to be tax residents of both the countries. So now what should the Indian fellow do? What he will do is, he will go one by one, A, then B, then C, then D. And even if in one clause the tie is broken, then Dada will be treated as resident of that country. So I will read one by one.
Sure.
First is, he shall be deemed to be a resident of the contracting state in which he has a permanent home available. If he has a permanent, okay. So if he has a permanent home available in both the contracting states, then he shall be deemed to be a resident of the state in which his personal and economic relations are closer. So if he is normally residing, if his habitual abode, the word used is also habitual abode. So if he is found to be tax resident of both the countries, and if he is normally residing in one country where his residence is there, and he is only visiting the other country, then the place where his residence is there, habitual abode is there, will be treated as his country of residence. And if he has residence in both the countries, then the place where he normally handles his financial affairs is the place where he will be treated as resident. So, Dada, you got it, na?
Yeah, I got it. Yeah.
Yeah.
I'm trying to absorb it. Let Anil continue.
So it is a good idea that India has such agreements with almost all bigger countries. The problem arises if you are a resident of British Virgin Island or those tax haven countries, because there these tiebreakers are not there.
So what about Hong Kong then?
No, with India has a treaty with Hong Kong, and there are tie-breaking clauses there. Don't worry.
Okay.
So the last tie-breaking clause is that if he has a habitual abode in both countries and the financial implications are there in both countries, he shall be deemed to be a resident of the contracting state of which he is a national. So if everything is common, then the citizenship comes into play. Then he would be a resident of the place of which he is a national. So there are four or five tie-breaking clauses in each treaty, and the moment you find that you are getting closer to being a Indian tax resident, you should check with those clauses so that you do not unnecessarily pay tax in India. Right?
Yes.
Anil?
Yeah,
Does it
correct.
clarify your query?
Correct, sir, it does. And
Okay.
sir, what could you please throw some light on the TDS being deducted by one country and being adjusted by another country when both the countries have the DTA entered or not entered?
Yes. So that is also a very important issue which needs to be highlighted. If you, as I said, if you are a tax resident of UK, then you are liable to pay tax on your global income in UK. But suppose India has taxed your Indian income at say 30%, or like if it's a share market capital gain, then at 10%, and tax has been deducted and money has been paid, or you have filed your income tax also in India and paid taxes at whatever tax is due. Now what you do is, in your country of residence, you file your return, offer the amount, because your global income will have to be taxed in that country. So you have to offer that, include that amount which was tax paid in India in your return of income, and while accounting for taxes, you get credit for the tax which is due on that amount as per UK tax rates.
Correct.
Either as per UK tax rates, or if your tax payment in India is lower than the entire amount. Okay.
Yes, sir.
So the credit will definitely be allowed by the residence country for the TDS or tax payment which has been done in India.
Correct. So, for example, when we are the TDS, the tax rate on the capital gain in India being 10% on long-term capital gain, while maybe let us assume a situation where the tax rate is 20% in UK on the long-term capital gain. The
UK will charge additional 10%.
Yes.
It will give relief of 10% which you have paid tax in India.
And if it is otherwise,
but suppose India has taxed you at 30% and UK tax is at 20%, then UK will give relief only up to 20%. It will not give relief for the additional 10% which was paid in India.
So to conclude this particular point, what you are trying to say is there is no refund case in the no refund situation in the case of DTW.
No, the foreign country will not refund you.
Correct.
The foreign country will give credit, tax adjust.
Correct.
Yeah. Yes.
So, sir, another question is when an NRI liable for filing the returns in India?
Okay. So I think do we have a slide on this? Yes. Slide number 10, Pradeep. Okay. Anil.
Yes, sir.
So there are some income. The income which I said accrued on the NRE account and
Correct.
FCNR account. Those are the incomes which are tax exempt under Section 10.
Correct,
So
sir.
if the income is exempt under Section 10, then you need not file return of income. That's the normal practice. So if an NRI has put in his funds in NRE account, and like I have instances where people from Gujarat, a lot of NRE non-resident Indians from Kutch, they have deposits of 4 crores, 5 crores, and lot of income is generated. But since it is a income which is exempt under Section 10, they don't have to come and file their return of income. But if the exemption is on account of something else, like Section 80 exemption, you have sold a piece of land, generated funds, but you have bought a house and you claim a set off or exemption under Section 54, there the returns have to be filed. So as the slide would indicate, if the income of the non-resident exceeds the basic exemption limit in India, India doesn't have to do anything with the income he is earning outside. So if he is earning, say, $1 million outside, but his income in India is below 2.5 lakhs, then he doesn't have to file his return of income. If the income is beyond the taxable limit, I mean above 2.5 lakhs, then he needs to file a return of income in India.
Right.
Okay. Then if, like Dada said, if he has transacted in shares and TDS has been deducted, so if he wants a refund, like he had he had earned, say, 50,000 or 1 lakh rupee or 1.5 lakh rupees as capital gains, but 10% was deducted. So if he wants that amount as refund, then he will have to file a return of income to get the refund. Now, I mean, the refunds are normally given, so people should not be very fearful of filing returns in India. The system is very transparent. Filing of return does not earmark you as a tax filer, and next year if you don't file it, you will get a notice. Nothing of that sort. If you are a non-resident, the income tax risk management system flags you as a non-resident, and it doesn't expect you to file returns every year. So that there is one more thing, as I said, that if the income is very high, like above 10 lakhs, suppose you have sold a piece of land, agricultural land, which is non-taxable, but the quantum is high, or you have got an insurance policy where the quantum is very high, then these transactions are reported by the authorities to income tax department, and then the income tax department expects people to file a return if they have a high income. So
Correct.
in that condition, you can file a nil return indicating that you had exempt income in the relevant column. So that will ensure that your fact that the income you earned was tax-free has been reported to the department. So there will be a reconciliation and no letter will be issued to you later on. You get it, Nanil? So if
yes,
there is
but
an
on this
exceptionally
point,
high income,
no, complete, sir, please.
If there is an exceptionally high income which is not subject to tax, like insurance policy, somebody has bought a LIC policy and it has matured in this year, and he gets 1 crore of rupees out of that policy, which is a term life policy which is not taxable. But that 1 crore receipt will be reported to the income tax department. So you can file a nil return, and there is a column in the return of income about receipt of exempt income, non-taxable income. So this amount can be reported in that.
Correct.
The income can be zero. So the very fact that you have reported this income will ensure that you are not troubled in future.
You're right, sir. But of late, we have been noticing that many clients are receiving these notices wherein the principal amount of the transaction, like you are selling, like you mentioned, on the sale of land or purchase of property, is being taken as a receipt and added in the income, and NRI is served a notice to file the returns. So
I agree with you there. There have been some instances. In fact, I have received a few messages from my non-resident friends about even this NRE account income, which the interest on NRE account, because it is reported. The bank will report the income to the income tax department, and then the income tax department had issued notices to those non-residents. So the issue of notice, I mean the issue is the letters are issued initially, and if you tell them that you are a non-resident and this is an interest out of non-resident external account, then the notice will be dropped.
Okay.
That has happened.
And
but
precautionary
I agree with you that in the last year, in fact, a few of my friends have broken the NRE deposits and they have taken the money away. That they said that 20 years we have not been a resident and therefore we don't want any bloody notice. So it happens that way. There have been some. I don't really blame the non-residents for being nervous about the notice.
Right. So precaution suggested is to at least file a nil return and submit that verification. Right? Okay. Sir, coming back to very basic, one more question. In case of NRIs have many of the NRIs have a property in India. Okay. When they get a rental incomes, so what kind of TDS deduction is liable in the one who is using the property? They are liable to deduct, because there is a lot of confusion amongst the NRI.
The person who is, up to 50,000, there is no need to deduct taxes. Up to rental income of 50,000
per month.
But for non-residents, the TDS is almost 30%.
Right.
For non-residents, the TDS is 30%, and the reason is that the government feels that the non-resident may not file a return of income. So entire 30% is collected at 30%. The rental income is subjected to tax at 30%, and TDS has to be deducted by the person who is paying the rent.
So be it residential or be it any property, there is no limit of 50,000 rupees also on the NRI, correct?
Yes.
Under section 195, it is
the entire amount, on the entire amount, 30% tax has to be deducted.
Right.
What the non-resident can do, I don't know if the TDS fellow can agree also. He can apply for he can submit a proper computation of his income based on that TDS, and ask the TDS officer to give him a lower deduction of tax certificate by saying that he is earning this amount of rent, because from rent he would get that 30% waiver, maintenance charge, and corporation tax waiver. So the tax rate is actual tax is less than 30% on a rental income, but he is being subjected to 30%. So he can apply for a lower deduction. based on his computation of income.
Right.
I think we'll have to ask Vishal. Vishal, please continue because a few questions left now. Time is
Yeah, sure. So we have little time left. Yeah, sir, it was very insightful till now. So my question is that as you mentioned during your presentation and talk, that there is an unintended residency issues like understanding the days of stay. You know, there were many. It looks very complicated that he has to stay this much days in a year, and vice versa. So, any
Yeah.
tips for NRIs that how they can optimize their stay in India? That was my question.
Yes. So, see, one thing that I wanted to say was that suppose you are not a regular person who is spending more than 180 days, but in 1 year, at some point of time, you are forced to stay for a longer period. So,
Right.
the tax residencies India is decided based on your stay in a particular financial period. So suppose you come in December. So if you plan your stay in such a way that it is spread over 2 financial years,
Okay.
right? Suppose in 1 year you spend 180 days, which
Right.
ends on March 31st.
Right.
Then immediately from 1st April, a new count will start.
Right.
So again, you can stay for 180 days. You
Okay.
realize. So in 1 year, 180 days ends in March. And in the other year, again, you can stay for 180 days. So it is a continuous stay of
Almost
360 days.
Okay. Okay.
But since it is in 2 financial years, you can avoid residency.
There is no requirement to exit the country or nothing like that. Straight away.
No. Absolutely no requirement. It is 182 days in 1 financial year. The financial year closes on March 31st. So up to March, one count. After 1st April, a different count. So you can do that if in sometime you have to stay for a longer period. So that would be one way of doing it. The second would be like planning your tax residency of your country of residence. Make sure that you are covered by the tie-breaking rules of your residential country.
Okay.
So that if in a year, if you happen to overstay, then you don't you fall in the tie-breaking clauses of the DTAA. Like that 120 days wala, which Dada is very nervous about. So if he is in Hong Kong for 183 days, absolutely no problem, because it is his habitual abode. So 120 days will not apply to him if he is a tax resident also of Hong Kong. So we have to go to treaty conditions and make sure that the treaty conditions of tie-breaking clauses are present with us. So that would be another way to avoid the tax residency. I mean, see, it is not a bad idea to be conscious of the tax residency rules, because you end up otherwise having a hassle in your residence country as well as in this country. It becomes a headache. It is better to have your total income tax in one place only, not at two places. It becomes a problem.
Correct.
So these are the two tips which come to my knowledge. Then another thing is like the residents of Singapore. They are exempt from their capital gains is not charged in India, and they are exempt from paying capital gain in Singapore. So that kind of see, the treaty also has some specific sections with reference to specific income. So if you have rendered a professional income, like India taxes the income which has originated in India. What happens if Dada as a consultant comes in India, talks about legal issues, is paid some money by the Indian resident, and he goes back to UK. So that income has accrued in India. But if he is a resident of UK, that income will not be taxable in India. It will be taxable in UK. So the Dada's CA can go to Indian tax fellow and get a non-deduction certificate for that income. Because as per treaty, that amount is not taxable in India.
Right.
As it is not fee for technical service as defined in the treaty.
Right.
As per Indian Income Tax Act, it is taxable. But as per treaties, it is not taxable. So he doesn't have to pay tax on that amount. There are some other clauses relating to capital gains as well as interest income. So royalty income. So you have to be conscious that income tax of India is not the only document which needs to be seen when you are deciding the taxability of a non-resident. In addition to the Indian tax law, you have to see the relevant provision of the treaty to check whether you are actually liable to pay income tax in India or not. Right?
Okay.
So that has to be, if he consults a normal regular tax income tax practitioner in India, he would be aware of Indian tax law and he will advise that, oh, no, you have to pay tax here. So he needs to tell that fellow कि आप treaty में भी check कर लो. I am a resident of another country. Right? So that.
Yeah, that's a very nice, insightful. Sir, one, I think we have 7-8 minutes more, Dada, right? One question, can I ask more?
Yeah, sure. Go ahead.
Yeah. Go ahead.
Okay. So there is a very critical thing about selling a property when you have an NRI status. So what happens is when an NRI is selling his property, there is a huge tax deduction. The TDS is very high. I think 22 plus cess, 23-24% approximately, right?
Yeah, this is 20%
if you don't apply for a non-deduction, it is 30%.
No, sir. TDS as per the section is 20% plus surcharge and cess.
Okay.
194 LE.
Yeah.
So in that case, what happens is many NRIs are they are discouraged to purchase property in India because when they sell, first is they face the problem of depreciating rupee, the currency depreciation. Plus, they also have to go through all this hassle to deduct the TDS. And as you rightly said, there is a way out. Like if you apply for a lower tax deduction certificate, which we have done many times. But it is a very, very lengthy process. Normally, it takes about 2 to 3 months to get the certificate.
No, the things have changed. You have to now apply it online, and the officer is mandated to give a response in 10 days.
Correct.
So
response in 10 days and conclude the case in 30 days.
Yes. So he will not, and in case you find that you are having a problem, you can flag the issue to a superior officer. And believe me, in international tax area, you have some decent officers. So I hope this problem does not happen. The lower deduction certificate is very much required by the non-resident or 54F or all those sections.
Right.
He may be investing in another residential house in India.
Right.
He may be selling a property, buying another one. So, absolutely. See, I cannot help you on depreciation of rupee. So that
No, I know, but I'm just saying that there are two similar points.
Yeah.
So it gives a little discouragement when
But
you have a couple
the
of things together.
tedious thing has been reconciled more or less, because it is now put, application is online. Generally, rejections are not there unless your submission is bad. So if you have a proper computation done, you generally get the lower deduction, the way you have done it. If the documentation is
So
proper.
sometimes the purchaser is very scared to buy from an NRI because of all these implications. So and they
See,
also not ready to wait for so long to there's it's like
see, he. There are two things. Now, even in local sale and purchase, the purchaser has to deduct TDS at 1%.
1%,
So,
correct.
yeah, so TDS has to be deducted, whether it is 1% or 30%. So, the now purchaser is not now hassle free, whether it is a local purchase or the other
Yeah,
issue may be that the purchaser may be offering something in cash, or the TDS, or and the NRE would require money in check. So those are issues which are typical of local market. But
yeah, right.
otherwise, I would believe that things are getting better. Uh, things are getting positive. Yes.
Yeah, right.
So
And the
the
last
best thing
question
is
I would
that.
just put is, yeah, sorry, yeah.
Yeah, I
No,
would
no,
just
please go ahead.
wanted to say that the best thing is that the assessments have become online and faceless. So filing a return, the non-resident should not feel hesitant in filing a return. See, there have been experiences, ki non-resident has suffered a TDS of say 1 lakh, 2 lakh, but he feels that return file करने पे और ज़्यादा hassle होगा. So he would
Right,
just
right,
leave that 1 lakh or 2 lakh and forget the amount and say that नहीं return
right,
नहीं file करना है. So
right,
I'll tell
right.
you my experience when I was in the division of international taxation. The what happens is nowadays, if there is any income received from interest,
Mm,
anybody, any amount, even if you earn 100 rupees from your
mm.
running account or saving bank account or fixed deposit, it is reported to the department and it is displayed in your information AIS.
Yes,
And
yes.
if it exceeds say 50,000 or 1 lakh rupee, then it is flagged. And the risk management software of the department scans for whether this person who has earned an income of 1 lakh has filed his return of income or not. And if he
Okay,
has not filed his return of income, then his case is sent to the assessing officer for issue of notice.
okay, okay.
So even if TDS has been deducted at 30%, but no return has been filed, then he would get a non-resident would get a notice. And in many cases, what has happened is that when we issued a notice and non-resident filed a return, he got a refund because his income was 2 lakhs and the exemption limit is 2,50,000.
Ah, ah,
So
ah.
we gave
Right.
him a refund of 20,000 by issuing him a notice.
Correct, correct.
Okay,
So let them not be afraid of filing a return. That's my
okay, okay.
request.
Right. No,
Okay.
great. Sir,
Thank you.
last question I will just quickly ask you. So this is, as you mentioned, the repatriation of funds, which is in a NRO account, which is, it is, I guess, you said 1
Um,
million US dollars per year,
yeah.
right? So
Yes.
if he wants to repatriate more funds than that, for example, is there any way out or there is no way out?
No, there is a way out of taking permission from RBI.
Okay.
The bank, as a representative of RBI, would probably allow if there is a reason. Or he can also transfer some funds from his NRO to NRE account.
Mm-hmm. Okay,
And
okay,
then from NRE account, he can repatriate without any limit.
okay, okay.
Okay.
Understood.
Ah.
But it is allowed to transfer from NRO to NRE?
Yes, 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 it is allowed. It is allowed. So, in
Sure,
fact, he
sir.
can plan his interest income also. If he's earning too much interest on NRO account, he can transfer some funds in the NRE account and get an exemption of that interest.
Okay.
Correct.
I
Right.
think
This I was not
this
aware. This
program
was very
has been
Ah,
so interesting. I would love to take on this continuously, but time is running out. So
yes.
I just have
Brother,
one.
I completed my questions, so you can take it over from us.
Yeah, yeah.
You have a
Dayalji.
question?
No, he has completed
No,
Dayalji.
no,
You
I'm
can
saying,
continue.
yeah.
Okay, so now I just want to tell the viewers that I have a copy of this. Uh, what is that? Slides.
Presentation slides, yeah.
Entire slide.
Right.
So if anybody wants, I can send it to them by email. The complete structure. There are about 10 pages, right? About 10 pages,
Yeah,
right?
10 or 12
Right.
pages.
Which gives a easy understanding into the whole situation. But nonetheless, I feel that the it's quite complicated, this situation. And the 120 days is a sham. I don't agree to that. And I wish I could talk to somebody there in because now Ram Mandir is open. We need tourism. We need NRIs to come and spend money. How are we going to do that with so many loggerheads and that fear of coming to India and being taxed? I mean, what they earn in abroad, that does not belong to anybody. It belongs to the inheritors of their children. They come here. They want to settle down in India. They want to enjoy India. They want to have a temple, resurrection of temples and see our land. And here we come and we get trapped into this situation like tax borough. Why? There is
So,
something wrong somewhere, and I think governance has to do something about it.
so
We
what?
why we have to spend money in Dubai and other places before we come from London to India? I feel there should be some ombudsman where we can convey our complaints to somebody in the tax people who convey or make taxations.
See, number one, uh, earlier, since the taxation was high, there was a tendency for Indians to shift money outside. But that now money is flowing into India. So,
Hmm.
no interest in shifting money. They can pay Indian taxes in India and enjoy the Indian life. So I agree with you that these unnecessary stringent residency clauses are not required. Uh,
Thank you so much. I love
what
you for
what
that.
we will do
I
is what
wish you could convey this to the center. And, I don't mind. We should talk about these things because I don't know from where they conjure up these laws. I mean, we cannot have the colonial mindset. Our entire setup of mindset is trying to evade taxation
yes, yes.
until today. Everybody just has that psychology of evading taxes. And some find loopholes and some make loopholes. I mean,
Sir, can I
so
make two
why don't
comments here?
the government just reduce the taxation, make it 10%? Everybody will be honest.
Sir, can I make two comments here?
Yeah, sure.
Sir, one is the tax payment with the country whichever is has a good tax base, no, is always a sustainable economy. So I think India is on the track by rationalizing the tax rates from past 10 years, 8-10 years. We are on the right track, and Indian taxation is still better than some of the very developed economy in the world like US and UK. They are most complicated. Perhaps you are not into it completely. Maybe that is what is create as a challenges to understand. And second comment is don't avoid the tax. Tax avoiding is not at all sustainable. Either you pay tax today, or you pay tax tomorrow, or you pay a bigger tax at the end. avoidance of tax is not the solution.
No,
Please
It is
no.
tax.
You have a tendency right from beginning. I've seen 60 years or so. Everybody is just trying to save tax. Nobody wants to, honestly speaking, how many companies you know are paying full tax? Hardly. I mean,
No, no,
I
I know
don't have
many.
any
I know many,
statistical
but
data.
that is not the debate.
Yeah.
Dayalji,
So
Dayalji,
my question is that if the taxation is reduced, then more NRI will flow in.
I
We
will,
need
I will,
NRI.
I will give you an example. See, Ireland has tried to do the thing that you are saying. They reduce taxes to 10 to anyway. They have a variable tax. The company can negotiate the rate of tax between 4 to 30%. But the problem as of now is probably later on, maybe even India may consider a lower rate of tax. But as of now, as in the developed economies as well, if you want to give social facility, India has a lot of poor people. So a lot of money goes into social things. And that is the reason why the government wants to have more funds. But you would be right to question whether the taxes that you are paying is actually going to the correct
Yeah, that is
destination
a
or not.
greatest, historically,
Hmm.
the income tax department is playing cat and mice, story with all of us.
Yes.
They want the clients or people to be transparent, honest. But do we have the right to ask for transparency from the people who are collecting tax?
You have all the right to ask. You have all the right to ask.
But we don't get whom to ask, we don't know.
What we
The
will
big
do, I
question.
will do is, I will, there are some emails which belong to the PMO and the finance minister, and opinions are taken. I'll give you that. I'll share with you that.
Okay, good. I would love to do that on behalf of all the NRIs.
Yeah.
Definitely, definitely.
I don't know, maybe we might have one more session depending on how people react today.
Yep.
But meanwhile, today we'll call it a day and uh, close the show, or conclude the show. Vishal, can you
Yeah,
conclude the
sure.
show with a prayer? But I would like to
Yeah,
thank
sure.
Satyaji. Thank you very much for your presence and your guidance. And we will come to you for advice later on.
The
And
pleasure
again,
was mine. The pleasure
for
was
your
mine.
presence, and hope that you will be able to do a better job now since you're more clear, I think. Right?
Yeah, absolutely no issues. The pleasure was mine. I enjoyed the evening.
Thank you
Yes,
so
Vishal.
much. God bless you.
Thank you,
Thank you.
sir.
Thank you.
Can
Thank you
we
so much.
conclude with a prayer?
Yeah,
Vishal?
sure. So I'll just close. No, just 2 minutes. Yeah, I'll also like to thank sir because I've been dealing in NRI segment since many years now, and many things I could, especially the staying days issue was very clear today. Thank you, and thank you Anilji very much for
Thank
coming
you.
at such a short notice. Thank you
Thank you,
very much.
Diwali sir. Thank
Yeah.
you for.
So
Thank you very
normally
much.
we
Thank.
yeah. Normally, we close the show with some shloka. So today's shloka is I'll just recite and tell briefly about it, and then we'll close. So today's shloka is Om Gan Gan Patay Namaha Shrim Hrim Klim Mahalakshmaya Namaha. So this basically shloka is to as a salutation to Lord Ganesha and Mahalakshmi to bless us with lot of abundance, financial abundance. So because we are talking about finance, so I thought I'll recite the shloka.
Thank you,
Wish
everyone.
you all
Thank
Thank you
you.
very
finance.
much. Thank you very much. Thank you for the show.
We'll see. We'll talk
Okay.
Wish you
again.
all finance
Yeah.
abundance, which will result in tax abundance also. See you. Bye.
Yes, yes, true, true, very true, very true.
Bye.
Thank you, Satyaji. Thank you, Vishal. Thank you once again. And Anil,
Thank you,
we'll
Hariam.
talk to
Thank
you
you.
later on.
Yes, sir.
Thank you, Dada.
Okay? Hari Om.
Hari Om.
Take care.
Hari Om. Hari Om.
See you again.